What's going on, everybody? It's Blandon here from Mortgage HQ, and today I want to share with you how you can get started in property investing with these 5 simple steps. Now, property investing can be very complicated, but at the same time, it can be very easy and very simple. And it is very easy for you to smash that like button for the YouTube algorithm. Seriously, guys, for the love of mortgages, smash that like button. Now, personally, I've talked to thousands of people, and the biggest regret for property investor more often than not is not buying earlier. So don't make that mistake. Use these 5 simple steps to get yourself started early. It's something that I wish I knew as well. So step number 1, goal setting. You need to understand your why, and you need to set a SMART goal. What is that? We've all heard it before. Specific. What are you trying to achieve? Is it you wanting passive income so that you can have more freedom for your family? Is it so that you have more passive income to pursue what you're passionate about so you can quit your 9 to 5? Be specific and know your why. Measurable. How much is the passive income goal that you're going for? 80,000, 120,000, 150,000. And according to the 4% rule, to generate 80,000 of passive income, you need $2 million of assets. So that's a very good place to start. And is your goal achievable and realistic? A lot of property investors starting out always want to aim for 10 properties in 10 years, but is it actually achievable in their current circumstance? How are they going to build up so that they can achieve it? Some people want to retire in 5 years. Are they being realistic? And until you try to study more through books and seminars, webinars like ours, we've got a webinar masterclass that we run every week, and look at those real life case studies, it's going to be very hard for you to figure out what is achievable and what is realistic with properties. So I do encourage you guys to just do a bit more research around those areas, and that's going to make your goal a lot easier. And lastly, timely. How long before you actually going to achieve your passive income goal? And step number 2 is understand your capacity. You need to understand the strength and weakness of your position. What are the opportunities that stands for you? And what are the potential threats if you went down a particular property strategy? Are you going to get stuck? You need to know what is your borrowing power. And typically you can find out talking to a mortgage advisor like Mortgage HQ. And how much equity do you have? Are you in a high cash flow position or a low cash flow position? High equity position or a low equity position? A mortgage advisor can sort of work that out with you. And once you know what your weakness is, you can have a property strategy that can fill that gap, or potentially you have other people to fill that gap. Such as if you're in a low equity position, you can get your parents in as a joint partner, or you can get your friends in to do a project together. So it's very important for you to understand your strength and your weakness and what are the opportunities that stands for you by first understanding your capacity. And step number 3 is to pick a property strategy. Now, depending on what capacity you're in, the strategy is going to change dramatically, because depending on what kind of numbers you need to chase, say for example, a low equity position needs to chase a higher equity margin on the deal, or if you're in a low cash flow position, you need to chase a higher yield. And that will dramatically change the strategy that you should be using right now. If it's cash flow that you need, you might potentially look at regional cash flow properties. And a lot of our clients, even though they might not live in the regions, they have properties outside where they get property managers to manage it, and they do really well doing that kind of strategy because they're generating passive income straight away on those properties. Now, if you can't hack having properties that you can't see or visit, then potentially you could look for something that's like a home and income where you get dual income on the property, or you can potentially look for properties with a bit of land that you can build a minor dwelling or another property in the back to increase the cash flow position. If you need to build equity quickly, then potentially you might want to look for renovations where you can add value. You're buying the property undervalued because they're selling it as it is, it's old, so they leave a bit of margin in there for you, and so that you can make it more modern or maybe even add a bedroom to increase the value. If you're in a very low equity position, you might even look to consider doing a JV or joint venture with a friend to do a property where you can renovate and you can sell it so that you can get your money back quickly and then you can go again. If you have a little bit more equity to start with, a very good strategy is subdivision, because if you can find a property where you can build 2 or 3 properties in the back, and you might be able to sell 1 or 2, or if you have enough borrowing capacity, you can hold all of them. This strategy is very lucrative because you're creating both cash flow and equity. And I would rate it as one of the most profitable residential property strategies. But it is a bit more complex. You have to understand the unitary plan. You have to understand some of the development potentials in a particular site, and you have to have the right people on your team, and doing the numbers is the most important, because if you overpay for a property, you could end up overcapitalizing by developing it and you might not make any money at all. So numbers is very important, and then again finding the strategy that is going to be suitable for your current situation. Step number 4 is market research. Now, one of the biggest mistakes that investors make, or new investors make, is that they try to look everywhere. It is very important that you try to narrow down your search so that you'll find success sooner. Now, let me put it this way. If you were to look for veggies on special because you're on a diet, you can go into a supermarket and you'll see a lot of special signs. A lot of veggies are going to be on special, but how much discount are you actually getting? It could be just a 10-cent discount, they could put a special sign there. 20-cent discount, they can put a special sign there. You don't actually know until you actually narrow down your search. Say for example, you're looking for broccoli on special. And if you're going to the supermarket every day to look at broccoli, and if suddenly broccoli became half price, they put a special tag on it, you know it's a good bargain. So being a specialist in a specific area and a specific strategy is going to help you find a more profitable property a lot sooner. Now, market research requires you to do little actions on a daily basis. Setting up your filters on apps like realestate.co.nz, TradeMe, yourhomes.co.nz, even relab.co.nz if you're looking for development sites. And I find the best property investors will always have a spreadsheet. So start that spreadsheet, logging on all the properties that you're looking at, follow up on the sale price with the real estate agents, and make sure you're jotting those down, because when the special comes up, you will clearly see it if you're doing your homework correctly. And step number 5 is persevere. Properties is a numbers game. There are 2 components to the numbers. Obviously, you've got the numbers on the property, which is looking at the cash flow, the capital gains, the margins, how much do you actually make on the property? That's the number side on the property. Now, the second most important one is looking at deals. Think of it as a sales funnel, and I have mentioned it in another video that you got to go through 100 deals, potentially go to 40 open homes, and then make 15 offers, and you might just get 1 to 2 accepted. So working with those numbers, you will then find that good deal a lot easier. And you need to remember that you are working on logic and numbers and not emotions. So if you lose a deal because the numbers don't stack up, don't worry about it. Just keep going. Because if you think of it this way, just finding that one good property that's going to make you money for 10 to 20 years, it's well worth it to put the effort in every week, little by little, because you know the capital gains is going to rise faster than you can actually save money by yourself. So just remember, persevere, patience, patience, patience. Always stick to your numbers. And a very good place to start if you're confused by the 5-step is just to talk to a mortgage advisor. See where your borrowing capacity and your equity position is. What is the opportunity for you? Where the weakness is? What do you need to work on so that you can prepare yourself for a property investment? What is your one biggest takeaway from this video? I'd love to hear your comment below. Always open to new ideas as well. And if you want to see more real life case studies and look at the numbers behind some of these properties, I'd like to invite you to one of our online mortgage masterclass in one of the links below. I'll see you guys in the next video.